All right, so today we're going to be taking a deep dive into some stock market predictions for 2025,
Sounds good.
specifically focusing on the Nasdaq. So some sources are super bullish,
Yeah.
expecting massive growth, and others are kind of waving a little red flag warning about a possible correction,
Right.
maybe even the biggest correction in a couple of years.
Yeah, I mean, it's going to be fascinating to see how those different viewpoints play out as we go through this deep dive together.
Absolutely. So to kick things off, why don't we jump into that Motley Fool article?
Okay, sounds good.
It seems like they're really all in on tech stocks for 2025,
Mm-hmm.
and specifically anything tied to AI.
Yeah. Well, AI has obviously been huge over the last couple of years. I mean, 2023, 2024.
Right.
Just explosive growth. And, it's only going to get bigger.
Yeah, they seem to think so too. They even went so far as to name Meta, Alphabet, and ASML as the ones to watch.
Interesting picks.
Yeah, what's your take on that?
Well, Meta and Alphabet, I mean, those are the giants in advertising, right? And
Yes.
AI-powered targeting.
Right.
I mean, they're just getting better and better at that. And the thing is, given their market positions, they're actually, relatively affordable right now.
Oh, really?
Yeah, they're trading at lower PE ratios than the Nasdaq 100 average.
Huh. So does that mean that they're potentially undervalued then?
Well, that's certainly what the Motley Fool seems to be suggesting.
Potentially a good
Ooh.
deal for investors.
Potentially, yeah.
Wow.
Now, ASML, they're a little bit less of a household name, maybe,
Okay.
but they're really crucial to this whole AI landscape.
How so?
They build the specialized machines that are needed to make these high-end chips. It basically gives them like a monopoly in that market.
Oh, wow, monopoly.
Pretty much, yeah.
That's pretty powerful.
It is, yeah. They've hit a little bit of a snag recently with the restrictions on selling to China.
Right.
That's caused their stock price to dip a little bit.
Right.
But the Motley Fool sees that as a buying opportunity.
Oh, interesting.
They're saying their long-term growth potential is still incredibly strong.
So short-term dip, long-term potential upside.
Yeah, exactly.
It seems like there's a lot of different geopolitical factors at play here, too.
Absolutely.
But overall, it sounds like the Motley Fool is pretty optimistic about these tech companies, especially when it comes to AI.
Yeah, they're definitely bullish on AI.
Now, do they highlight any other companies besides those big tech players?
They did, yeah. They actually pointed to PayPal and Mercado Libre,
Okay.
but they're looking at those more as value plays.
I see. So less about the sort of flashy tech and more about companies that might be a little bit overlooked or misunderstood by the market.
Yeah, kind of like diamonds in the rough.
I like that.
So PayPal, for example, under new leadership, they're actually staging a little bit of a comeback.
Oh, wow.
Yeah, free cash flow is increasing. They're buying back shares.
Clear.
Earnings growth projections are solid. So it looks like the market might be undervaluing them at the moment.
A comeback story, always exciting.
Yeah, I love those.
And then what about Mercado Libre?
So they're kind of like the Amazon of Latin America.
Oh, yeah.
They do e-commerce and fintech, and they're the dominant force down there.
Wow.
They've had a few hiccups recently with some credit issues,
I see.
but analysts are predicting strong earnings growth for them in 2025.
Okay.
So it's kind of a bet on the continued growth of Latin America as a whole.
Makes sense. Latin America's been a growth story for a while now.
Yeah, it has.
But, if we're talking about different perspectives, that CityBiz article that you sent over,
Right.
they're coming at this from a very different angle.
Very different. Yeah.
They're actually suggesting that we might see a market correction in 2025,
That's right.
possibly even the largest in 2 years.
Yeah, it's a bit of a counterpoint to that Motley Fool optimism.
Definitely.
Yeah.
So what's their reasoning behind that prediction?
Well, they're saying that while there is this bullish sentiment out there, a lot of analysts are setting these really high targets for the S&P 500.
Right.
They're saying that there are some warning signs that we shouldn't ignore.
Like what kind of warning signs?
Well, for one thing, valuations are pretty high at the moment.
Yeah.
And there are also a lot of what are called extreme long positions.
What does that mean?
Basically, it means investors are really heavily betting on the market continuing to go up.
Okay.
And that can be risky because if sentiment shifts even a little bit, it can trigger a sell-off.
So even if things are going well,
Yeah.
a little bit of bad news could really spook people.
Exactly. And then on top of that, there are signs of what's called buyer exhaustion.
Buyer exhaustion.
Yeah, essentially, people are becoming less willing to buy at these high prices,
Makes sense.
which can signal that a price drop might be coming.
So it's like even though everyone's really excited right now, the market might be getting a little bit ahead of itself.
Yeah, that's kind of their point.
Interesting.
CityBiz even went so far as to do some technical analysis,
Oh, wow.
which is a way of looking at charts and patterns to try to predict market movements.
Okay.
And they think that a correction could bring the S&P 500 down to around 5,100 in the first half of 2025.
Wow, okay. And they're saying it could even be worse than that if those bearish trends continue.
Right. It's not a guaranteed outcome, obviously,
Of course.
but it's definitely something to be aware of.
Yeah, that's definitely making me think twice about things.
Understandably, but before we, jump to any conclusions, let's see what the other articles have to say about, current market trends and things like that.
Yeah, good point.
Yeah.
So both the Raiders and stock market news articles focused on that recent surge in chip stocks,
Mm-hmm.
particularly NVIDIA.
Right. Yeah. That's really interesting.
It is.
It shows how all these different trends are kind of interconnected. So NVIDIA's rise is largely driven by their focus on AI,
Right.
and they're getting a big boost in sales from a key assembler called Foxconn.
Foxconn.
Yeah, they assemble products for a bunch of companies like Apple and stuff.
Okay.
So it's a big deal.
Yeah, it sounds like it. So even though there's this talk of a correction,
Mm-hmm.
the excitement around AI is still really driving certain sectors of the market.
Oh, absolutely.
It's fascinating to see how these different forces are kind of playing out.
It is, yeah. But at the same time, there's still a bit of a note of caution in the air.
Okay.
Investors are keeping a close eye on potential policy changes under the incoming Trump administration.
Right. Of course, the political wild card always throws a wrench into things.
Yeah, especially when it comes to things like tariffs.
Right. That stock market news article mentioned how sensitive the market was to those tariff rumors.
Exactly. So we've got AI driving growth, but also these warnings of a correction, and then the uncertainty of new policies.
It's a lot to unpack.
It is, yeah, it's a lot to unpack.
Where do we even begin to make sense of all this for our listener?
Well, I think the best way to proceed is to maybe consider a few different scenarios for 2025.
Okay.
We could look at the potential impacts of continued AI growth, the likelihood of a correction,
Mm-hmm.
and then those potential policy changes.
Right.
And from there, we can kind of start to see a clearer picture.
That sounds like a good plan. Let's
Yeah.
explore those scenarios and see what we can uncover.
Sounds good to me.
Okay, so let's dive into those scenarios. You mentioned what would a really optimistic 2025 look like?
Well, I guess in the most optimistic scenario, AI just keeps growing like crazy.
Right.
Companies like NVIDIA, Meta, Alphabet just keep exceeding expectations.
Mm-hmm.
And the Nasdaq just keeps climbing.
Right.
It would basically be an extension of the tech boom that we've been seeing.
Right. So more of the same, just bigger and better.
Exactly. But even in that scenario, we talked about the possibility of a correction.
Right. How does that work if everything's
Sure.
going so well?
Well, that's the thing about markets. They tend to overreact in both directions.
Okay.
So, remember those warning signs we talked about?
The high valuations and the buyer exhaustion.
Exactly. Those are still red flags, even if the AI sector is doing great.
So even in a boom, things could suddenly take a downturn.
They could, yeah. That CityBiz prediction of a correction potentially down to 5,100 for the S&P 500,
Right.
that's still worth paying attention to.
Okay, so it's possible, even likely, but the severity is uncertain.
Right.
What about the flip side? What if things take a turn for the worse?
Well, that's where those potential policy changes under the Trump administration could really come into play.
Right.
If they implement tariffs aggressively, it could really disrupt global trade
Right.
and hit companies with international supply chains pretty hard.
And we know that the market is sensitive to those kinds of things.
Remember that stock market news article mentioned how much those tariff rumors were already affecting things?
Right, so tariffs could be a catalyst for a larger correction or even something more serious.
Yeah, they could definitely make things worse, especially if they're combined with other negative factors.
It's like what?
Like rising interest rates.
Okay.
Or geopolitical instability.
You're right.
We could see a much more substantial decline in that scenario.
That's a bit unsettling, but didn't the market actually respond well to Trump's presidency in the past?
Yeah, there was that whole Trump bump.
Right.
But it's important to remember that the economic and political landscape is totally different now.
Okay.
It's really hard to say how the market will react this time around.
So a lot of uncertainty hanging in the air.
A lot of uncertainty, yeah.
What about those specific stocks that the Motley Fool mentioned? Meta, Alphabet, ASML, PayPal, Mercado Libre.
Right.
Are those still good bets, even with all this uncertainty?
Well, each of those companies has its own strengths and weaknesses.
Okay.
Meta and Alphabet, even though they're huge, they still have room to grow in the AI and advertising space.
Right.
ASML has that near monopoly on chip-making equipment,
Right.
which is a major advantage, but those China restrictions are definitely a concern.
Mm.
PayPal's turnaround story is interesting, but it's still early days.
Okay.
And Mercado Libre is a good way to tap into Latin America's growth potential, but they need to manage those credit issues effectively.
So there's potential, but investors need to be cautious and do their research.
Exactly. Due diligence is crucial.
Right.
Research each company, thoroughly understand their financials, consider their competitive landscape.
Mm.
And don't forget to factor in those broader economic and political risks we've been talking about.
Right. Don't just take the Motley Fool's word for it.
Exactly.
I think we've given our listener a lot to think about.
I think so.
But let's step back for a moment and talk about the key takeaways from this whole discussion.
Okay.
What are the most important things for them to remember?
I think the biggest takeaway is that 2025 is shaping up to be a really dynamic and potentially volatile year for the stock market. AI will likely continue to be a major driving force, which creates some really exciting opportunities for investors.
Right.
But those warning signs of a correction are real.
Right.
And the potential impact of policy changes under the new administration adds another layer of uncertainty.
So it's a mix of excitement and caution.
Exactly.
Great potential, but also a need to be vigilant.
Yeah, I think that's a good way to put it.
So for our listener who's trying to navigate this complex landscape,
Yeah.
what would you say is the most important thing to focus on?
Well, first and foremost, I would say stay informed.
Okay.
Keep up with market trends, economic data, political developments.
Right.
And don't just rely on one source of information.
Okay.
Diversify your research, read different perspectives, try to see the bigger picture.
Be a critical thinker, not just a follower.
Exactly. Develop your own informed perspective. And second, take a good look at your own investment portfolio.
Okay.
Does it still align with your risk tolerance and your long-term goals?
Mm.
If a correction does happen, are you prepared for a potential downturn?
Right.
Rebalancing might be something to consider.
That's a good reminder. Don't just set it and forget it.
Yeah, active management is key.
What else should our listener keep in mind?
Don't let fear paralyze you.
Okay.
Market corrections are normal.
Right.
They can even create opportunities to buy assets at a lower price.
Right.
And remember, long-term investors are often rewarded for staying the course and not panicking during periods of volatility.
Great point. Stay calm, do your research, and don't let short-term ups and downs derail your long-term strategy.
Exactly. And finally, don't underestimate the value of professional advice.
Okay.
If you're feeling lost or uncertain about how to navigate these complex market dynamics, a financial advisor can provide personalized guidance tailored to your situation.
Solid advice. We've covered a lot of ground today. The potential of AI, the possibility of a correction, value plays the uncertainty surrounding the new presidential administration. What's the one thing you really want our listener to walk away with?
The stock market is fascinating, but it's also complex and demanding. It's full of opportunities, but it requires respect and careful consideration.
Okay.
Stay informed, stay engaged, and always be willing to learn and adapt.
Beautifully said. And for our listener, what final thought would you leave them to ponder as they continue their own deep dive into the world of investing?
The future of the market, like the future itself, is ultimately unwritten.
Ooh, I like that.
Your decisions today will shape your financial tomorrow. Choose wisely, invest thoughtfully, and never stop exploring the vast landscape of possibilities.
Wonderful. Thank you for guiding us through this intricate world of market predictions.
My pleasure.
It's been truly enlightening, and to our listener, we hope this deep dive has sparked your curiosity and given you some valuable insights to navigate the exciting yet uncertain year ahead in the stock market.
Absolutely.
Remember, knowledge is power.
It is. And if you enjoyed this deep dive, don't forget to hit that subscribe button and the bell icon so you don't miss out on future episodes.
Yes, please do that.
We're here to help you navigate complex information and make more informed decisions, whether it's about investing technology or anything else you're passionate about.
Until next time, happy investing.